Hello, friends, and welcome to Market Shares. I'm your host, TonyBlodgett, and here we are. We're in the middle of September, and you know what that means? It means the fourth quarter of 2025 is right around the corner. Now, I'm not sure how this happened so quickly. If you're like me, this summer just flew by, but it is a good time of year to take some inventory. You know, typically halfway through the year, we'll do like a mid-year checkup, and we're a little late for that. But you know what? I think the fourth quarter is probably one of the most important quarters for us to be prepared for, especially with what's going on right now. Like I said, we're here in September. There is a lot of talk about what's going to happen with interest rates. And I'm sure my episodes that are just before or just after this episode airs, we're going to be talking a lot about the jobs report, and there's opportunity for movement there. We're going to be talking about the Fed meeting and the opportunities there for rates to potentially improve. And everyone is watching so closely what's happening with inflation and employment and all of these things, all in anticipation of interest rates getting better as we move into 2026. So I don't think there is a more pivotal time to be dialed in and ready for a market shift. Now, that doesn't mean that a shift is going to happen immediately or overnight. Matter of fact, that's not really expected by anybody at this point. Doesn't mean it can't happen, because we've seen things that are unpredicted happen in the past. But this does mean that we should start seeing a gradual shift in the market and the behavior of our borrowers and the needs of our borrowers evolving. Look, as we all know, the last 3 years have been very difficult, but it also has created substantial opportunity for those of us in the mortgage business, because so many mortgages now have been written at very high interest rates. And as rates come down, we're going to have opportunities to refinance those clients. But you know as well as I do that sometimes people aren't quite ready for a refinance, even though rates have gotten better. And what I'm noticing already is that the mortgage servicers, the people that are collecting the payments on these mortgages, a lot of them paid very high premiums, meaning they were subsidizing their interest rates. And we've talked about this a lot on this podcast, that you see different investors that might have better rates than others. Part of the reason you saw some lenders or some investors with a little bit better rates is because they were anticipating the opportunity to refinance those clients sometimes 2 or 3 or even 4 times during the life cycle of that mortgage, which is why servicing premiums were so high for a while there, and still are in many cases very elevated with certain investors. So what does that mean? Well, that means you're going to start seeing that coming home to roost. That means that these servicers are going to be reaching out to your clients proactively, trying to get them to refinance very early on in this rate reduction cycle. And I'm already seeing it happen right now at a very feverish pace. Now, some lenders, like where I work, we service a lot of our own loans. And so now it's incumbent on the loan officers to do that proactive activity to make sure you're capturing that business. But don't be fooled. Even if you're the servicer, there's other people out there that are trying to get at your borrowers as interest rates start coming down. And so what that means to me is that a couple things that we need to do as proactive loan officers. First of all, we have to have our database dialed in. And what does that mean? Well, it means, first of all, looking at your database, right? Just A to Z, like going through your database and making sure that all the people in there, you have as much information about them as possible, that you've, graded them as far as what is their opportunity as interest rates start to come down. What was your experience with them? Any notes that you have? A database should be, a Rolodex of relationships, right? Relationships, not just people that you did a transaction for, but people that you have an ongoing relationship with. To me, that's what database management is. So if you look at your list and you go, man, I don't even know if these people would know my name if I called them. Well, I would say that would be an indicator you've not done a great job of using your database as it should be, which is to build deeper relationships with your clients. And so now might be a right the right time to go through that database, make sure that everything in there is organized and accurate. There's no duplicates, so on and so forth. It might also be a great time to just be touching base with people, not necessarily to offer them a refinance opportunity, but to set the stage that there may be an opportunity in the future and to clarify with them what their goals are if interest rates were to come down. So for instance, you might have a client that you closed the loan for in 2021. You might just simply reach out to them and say, hey, John, Susie, it's great to talk to you. Hope you remember me. My name's Tony. I did your mortgage back in 2021. And I hope you've been really enjoying that really low interest rate that you have. Well, actually, I guess if it was 2021, maybe they still had a pretty low rate. But my point is, maybe you call somebody who got a higher interest rate, right? Maybe this was 2022 or 2023. Same call. You're saying, hey, I did your loan for you in 2023. Your interest rate was a little bit higher back then. It was around 7.25%. And we all know that interest rates have already improved from where they were, but I don't think the time is necessarily right to consider a refinance. But I wanted to talk to you and see how things are going for you with that home. How long do you guys still plan on being in that property? I want to make sure that when the right opportunity comes up, I'm reaching out to you proactively. Now, I told you when we did your mortgage that part of my job is to keep an eye on things and let you know when there's opportunity. And I don't think we're there yet, but I think it's something we should watch very closely. And I want to make sure that I've got my notes here on when would be the right time to get in touch with you as things progress. Now, a conversation like that is not directly asking for business, right? It's just getting a feel for where they're at with things. I mean, it's possible they don't even live in that house anymore, right? Great time to update your database. Or it might be that they actually could benefit from a refinance right now. They might tell you, actually, we've been looking at home equity loans or some sort of debt consolidation loan because I know rates aren't super low, but man, we're just in a really tough spot financially. So maybe there is an opportunity there. But you could also let them know that as interest rates come down, you're going to see a lot of solicitation for your business. And I want to make sure that I'm your go-to resource as you vet out those opportunities. These are easy phone calls to make, right? Because these are clients that you've done transactions with in the past. Hopefully they remember you. Hopefully they had a good experience with you. And these aren't necessarily phone calls intended to close a transaction. These are phone calls intended to update your database, take your notes, and plant the seed that there's going to be opportunity and you should wait for me to reach out to you with that opportunity, as long as you obviously intend on being proactive with that. But that's the kind of activity that I'm talking about when it comes to your database is, do you have it all in one location, not piecemealed together? Is it easily searchable? Have you gone through it and made sure that everything in there is up to date and as accurate as possible? And then I would just start calling through those people, reintroducing yourself, touching base, see how things are going, setting things up for what might be to come in the near future. So that's the first thing that I'd be looking at when it comes to getting ready for the fourth quarter. Look, this is a time of year where historically things do slow down a little bit as we move into the winter months. So I would make a plan of action to be proactive during that time to work on your business, because you might have a little less time working in your business if things do slow down. Now, this winter might be an exception, right? Depending on what happens with these jobs numbers moving forward, depending on what happens with inflation, we know that the Fed has a lot of room to do some further easing of interest rates. And if they decide to accelerate that for whatever reason, it really could accelerate things here in the mortgage business. Not to mention, purchase business would definitely tick up with the amount of pent-up demand that we have. So I think we all need to be on our toes right now and ready to tackle this. But if it plays out like a normal fourth quarter, chances are as we move towards the holidays, things tend to slow down. But you need to be proactive in making sure that your activity doesn't slow down, that you're reinvesting that time in getting your business dialed in and ready for 2026. Here's the other thing that I would make a big priority right now, and that's your time management. I think all of us that have survived this far through the market, the last 3 years of very difficult interest rates, at this point, chances are you're somewhat proficient at managing your time. You're clearly disciplined enough to go out and make the calls necessary to stay busy during this time. But remember, all this work that you might have done, in many cases, people rebuilding their businesses, right? Because during 2020 and 2021, when business was falling from the sky, so many of us got busy focused on what was in front of us, and we didn't manage our relationships with the real estate agents and the builders and the other sources of income we might have. And I know a lot of you have rebuilt those relationships. So let's make sure that if we do see a refinance cycle sometime in the next 12, 18 months, we don't let that happen. Well, how do we do that? Well, we have a plan. We set aside the time in our schedule to make sure that we're maintaining the relationships with the real estate agents and those people who have the ability to refer us consistent business, while we make sure that our database is dialed in, the calls and the stage is set for refinances so that those don't monopolize our time, and we're now freed up to earn that extra income, do those additional transactions without disrupting the way that we run our normal business. That's frankly got us through these more difficult years. Also recognizing that if rates do come down, the amount of purchase transactions, the amount of real estate agents you'll have the opportunity to engage in will go up as well. So this is why they say that, careers can really be made in a transitional year like the one that I think is coming. This doesn't mean that transactions will be falling from the sky, but look at the number of people in our industry, how much that has shrank. Look at how many transactions were written at very high interest rates over the last 3 years that are just dying for an opportunity to lower their monthly payment. And then you look at the pent-up demand, the number of home buyers who have been on the sidelines because they were priced out of this market. And when you add those three things together, this could be a very busy time for those of us that have stuck it out and stayed here in the mortgage industry. But you're only going to be able to capitalize on it if you're organized and you're prepared for what is to come. And in my opinion, as we wrap up summer here in 2025 and we move into the fourth quarter, it's the perfect time to take inventory of how did this year go? How are you tracking with your goals as you move into the fourth quarter? How do you finish strong, but also preparing yourself for what's to come? And the last thing I'm going to mention is a lot of events happen events happen at the end of the year, right? In the fourth quarter. So I would start now by planning on what events you plan to attend. If you plan on hosting any events, I would get those, ironed out, dates set, and on people's calendars as early as possible, because there's a lot of competition for people's time, especially as we get closer to the holidays. And the last thing is I would plan out your schedule for the time that you plan on taking off, even all the way through the end of the year, through New Year's. I know it seems early to do this, but I would say, look, I definitely want to take this time with my family. We're going to spend it for, whatever it is, Thanksgiving. We got this going on for, the Christmas holiday. But all these days in between, I'm going to work. And to me, it's no different than scheduling an appointment with yourself, because you know as well as I do that there's those weeks where, Thanksgiving week, we got 2 days off already. We might as well, slack off for the other couple days. Nothing's really going on anyways, right? Yeah, supposedly, but there is stuff going on. And it's a story we tell ourselves. Same thing between Christmas and New Year's. We just flow from one to the next and we don't do anything. Look, I'm not saying don't take time with your family. I'm saying schedule the days that you plan on working and get up and make sure that you put in a full days of work on those days that you've scheduled. So lay that out today so that when that time comes and the holidays and family, and it's easy to just sit around and your kids are off school or whatever the case may be. It's easy to coast, but it's the worst time. You know this. It's the worst time for us to coast in our business. And in my opinion, the easiest way to make sure that you don't is you just schedule the stuff that you're going to do during those days that you might otherwise just kind of slack off. If you got appointments on your calendar, fill those days so that you wake up, you start it like a normal day. Don't act like it's the holidays like everybody else is. Act like, it's full-time work. And, obviously schedule the days you need to take. Don't get me wrong. But the days you're working, work a full day, put in the effort with enthusiasm, with a plan, with a strategy, so that when you get into 2026, you're starting that year off strong. Look, this is what I think is really good advice. This is a great time to take this inventory of what's going on in your business. Be ready to finish this year strong, but more importantly, be positioned for the market that is to come. Look, if this is stuff that you don't, you go, gosh, that all seems really simple, but I don't have a plan for this. Maybe this is the time where you seek out help from a branch manager, from someone else in your company that you look up to, a mentor. Maybe it's time to get a coach. Maybe it's time to find an accountability partner that you can, say, hey, let's do this together. Whatever you do, find that help and support. You don't have to do it on your own. It's much more difficult to do on your own. So consider that as well. And you guys, that's all I got. I just want everybody that watches this podcast to be super successful. And I've learned over the years, there's little steps that we can take and little shifts in our mindset that we can take at the right time, and it will set you up for success. And this is one of them. So I hope it landed on you that way. Hopefully you got some ideas here. And, with that being said, I can promise you this, my calendar, as we roll through the holidays, will be booked. I'll have time scheduled for my family, and I'll have time in between that I'm working and working hard, despite the fact that it might be between New Year's and Christmas or whatever the case may be. That's how I run my day, and it serves me very well. And it always makes sure that I don't skip a beat in my productivity while still being able to enjoy the holidays and enjoy our family. So with that, you guys, thanks for taking the time to watch Market Shares. For those of you that are subscribers, I thank you. And for those of you that aren't, consider subscribing so that you don't miss our next episode, which will be out every single Friday at 10 a.m. And man, we have some really great interviews and conversations that you're not going to want to miss as we move in here through the month of September. With so much going on, I'm bringing in some experts to talk about how to be positioned for the market, how to set yourself up and your business up for success. So you're really going to enjoy it. And until then, take care.